Hey, this is Matt from InvestiQuant. Today is Friday, October 23rd, 2020. And this morning when I was going through the alerts, I see we do have an IQ alert that's potentially in play here if we open up high enough. This is a long signal, but what I wanted to show you is in the My Alerts. I've got a couple alerts that I've saved here that we're potentially setting up for today. And if you're not familiar with the My Alerts section, this is where you can save your own research and be alerted on it whenever it's true for the day. And it will give you a heads up of something that's potentially in play ahead of the market open. And then whenever it actually triggers, like these that are based upon entering at the open, it'll actually update at the open to let you know if it is officially true or not. You know, it's got to wait on some things like where's the opening location because you don't know that ahead of time. But we've got a couple here that are potentially in play. And this top one here, 10-day low and bounce, is one that was saved for the NASDAQ. It's based upon gapping up above the prior day high when the prior day made the lowest low of the past 10 days, but then closed in the top half of its range. So it probes below recent lows and then bounces back up to the top of its range. This is above a 200 and is followed by opening above the prior day high. And it's fairly strong here, and it was something I wanted to be alerted on whenever it happened. So I saved it. But what I want to do is go ahead and add the other instruments to it, because it's a similar pattern that is taking place in the other instruments. Now, I don't know if we're going to be opening above the prior day high everywhere or not. The NASDAQ's not quite there yet as of the time of this recording, but the other instruments are. So I'm just going to go ahead and leave this pattern the exact same and then run the results so we can see what it looks like on the other instruments if gapping above the prior high. All right, and here we go. So these are the results for the same pattern that I saved in the NASDAQ, just applied to the other markets with it. That pattern is based upon gapping up above the prior day high when the prior day made the lowest low of the past 10 days, but then closed in the top half of its intraday range. This is above a 200-day simple moving average. And again, gapping above the prior day high the following session after that pattern. So historically, the NASDAQ, 42 samples, the S&P, 44 samples, the Dow, 42 samples, and the Russell, 27 samples. And if we look at the win rates, 3 of the 4 of these coming in pretty strong, so it's not just the NASDAQ that has favored that pattern, but the NASDAQ is probably here the strongest at 64%, the S&P 59%, the Dow also 64%, so just like the NASDAQ, and then the Russell is a bit weaker than the others at 44%. If we look at the average win to average loss, the average win quite a bit larger than the average loss here in the NASDAQ. It's also a larger average win in the S&P than average loss. The average win is larger in the Dow than the average loss. And then in the Russell, which was the weakest of the 4, it's pretty neutral. They're both about the same size when it comes to average win and average loss. So looking at this pattern, 3 of the 4 instruments have leaned to the long side, and the average win on those has been larger than the average loss. So that makes for a bit of a bullish pattern here historically. And it's worth mentioning, I've looked at this pattern multiple times, and I did save this specifically for the ones that are opening above the prior day high, because when you open within the prior day range, it's not quite as strong. So I don't know exactly where we're going to be opening at, but currently some of the instruments are trading above the prior day high, and that's where this pattern is strongest. So I'd encourage you to hop into the opening filters section, and if we don't open above the prior day high, you can test this with the open and within the prior day range, or however else you want to define the open as we get closer to the open. So hopefully you found that helpful. Good luck, and we will see you next time.